we need to talk about a potential $100 billion program aimed at first generational homebuyers. This is actually a program that is not yet approved, but apparently budgeted. I want to lay this out for Anna Kelly, who understands the system. She's been in private banking. Let her poke at it, ask me some questions, because I have a feeling that this might take housing substantially higher. How you doing, Anna?
I'm doing great. I can't wait to hear about this because I have not yet.
So this is a program that apparently President Biden and his team have got in next year's budget. It has not been voted on. So there is a great chance that it changes, it morphs, and actually may not get approved given split Congress. But I just want to play this out with you. Like, let's assume it gets approved and then ask you, if that domino falls and it's approved, where do we go from here? Does that make sense?
Absolutely.
So the current framework of the program is it has $100 billion. It's capped at $25,000 per borrower. It is
Okay.
aimed at first generational home buyers, which means your parents could not have owned a home. And you're a renter today, if that's not clear. I suspect there may add some income thresholds or whatnot. I've done the math really quick, 25 grand into 100 billion. That's potentially 4 million new home buyers going after
Wow.
first-time home buyer homes. So first thoughts, any questions? What do you think of this program?
I'd have to see more details, but I will say this, generally speaking, and I worked at Bank of America in private banking back in the late 90s when George Bush Jr. Passed the Community Redevelopment Act. And it
I
was
remember it.
essentially
Yep.
a first-time home buyer program nationalized that would incentivize people to come and, buy homes and basically get beneficial interest rates. They'd get a lower down payment. So subsidizing the true purchase costs involved in buying a home. And essentially what they had to do, I believe at the time it was 2 nights of some training that we had to
Yep.
make them sit through in order to get these loans. And unfortunately, the fallout that I saw from that is that, again, this was happening about a decade before the housing collapse, but you had so many people starting to buy homes that really they couldn't afford, that they already didn't have good money management skills. They already had too much debt. But basically, DTIs were thrown out the window. Whether they had, debt or not, as long as they went through a program to teach them how to budget and make sure they prioritized a mortgage payment, they got loans even though they weren't qualified. And that led to many, many people losing their homes, going bankrupt, and not doing well, especially, in the 2008 housing crisis. And so generally speaking, not to be a naysayer about the government, but anytime something is kind of nationalized or the government puts big programs in without making sure they're protecting the people and making sure that they can handle homes, it hasn't ended well. With that said, I came from Section 8 housing, right? So I grew up in apartments. I grew up, my grandparents owned a home. My mom didn't own a home. My dad owned, a trailer and then eventually bought a home. And so we were just starting to really buy homes. And so I have a heart for people that are renters, they're priced out of housing and they need some assistance. So I hope that this program is structured in such a way that it really does help people to get into the dream of home ownership, but that we don't really back off from qualified buyers. So we do require that they have good credit already. We do require that they can manage their finances, because if they're getting into homes at the peak of housing prices and interest rates, and down the road values fall, or they lose jobs and we go into a recession and we've basically let them walk into a home for free with down payment assistance, and they can't handle their money, it's going to hurt them in the long run instead of help. So I
I
just hope
couldn't.
it's done well.
I have the same hope, but like you, the government's here to help, kind of dangerous phrases to say. The biggest thing for me is when I didn't realize how big it was going to be. $100 billion, big number. 25 grand
Yes.
kind of feels like, that's a good number. That helps most people get into a home in most of the country. But then I did the math. 4 million. I know you know this, but just so the audience knows, we have something like 250,000, 300,000 entry level homes, probably less in the country. If you unleash 4 million people into a market where we just, for round numbers, say we have 400,000 available homes, that really doesn't
Prices are
end
going to
well.
skyrocket.
Yeah, especially for that type, right? Because
Right.
again, right, the home's 200 grand.
Mm-hmm.
You can get into that with, say 3% down, 6 grand. Let's
Yes.
say, yeah, 6 grand. So, okay, you can get up to 25 grand. Well, you know what? Don't give him 200, give him 250. Because now all you need 7,500. Shoot, it ain't your money. Give him 300. That's only
Right.
9 grand. Shoot, not your money. Give him 400. That's 12. I
Right.
mean, the amount of
It's going to be
overpaying.
great for the new home builders, right? Because basically there isn't enough stock in the United States to supply, 4 million new households, right? Did you say 4 million?
4 million buyers. Yes.
Right. So basically, we're going to have to build more. So the government's then going to have to incentivize, builders with different programs. And so builders will be doing well. But what's going to happen is prices are going to go up substantially because of supply and demand. You all of a sudden have even more demand, even lower supply, and that drives up housing costs. So for the middle class that wants to buy a home, they're going to be priced out because
Oh
if
gosh.
this is just for people below a certain income threshold that haven't owned, they're going to basically be able to pay almost anything
Yeah.
for a house, depending on the qualifications, et cetera. And the middle class is really going to be priced out. It's going to become even more unaffordable for most people, although it's going to help, hopefully, those that maybe are below a certain income threshold. Now, it'll
Yeah.
also have a wealth effect on the other side of the coin.
For
So
sure.
if values go up, it might be harder for us to get into a nicer house. But that's going to mean we grow equity. And if we're smart and investors, homeowners know what to do, they can pull that equity and use it to invest. But it is a positive sign for values if you're building equity. It's harder though, I think, for the middle class that wants to buy homes and even
Yeah.
for those, it's going to put more people in the middle class maybe into smaller homes or into renting, and more people in the lower class into home ownership.
Yeah, I think that's exactly what happens. We actually had a program much, much smaller size in California called the California Dream, where I think it was like $100 million, not 100 billion, like 100 million, maybe 50 million, some number. Anyways, it was consumed in 8 days. And what
Wow.
happened is buyers came out of everywhere and were bidding on such limited supply. I talked to mortgage brokers, 3 or 4 of them, and they were talking about, I've got 5 clients on that home. I've got 3 clients on that home. And they all were overbidding each other because it was free money.
Right.
This would
Right.
explode values and we need more supply on a not more demand. We don't need 4 million more demand. I mean, come on, this is crazy.
So interesting because my mind's going, what does it mean in a few years versus what does it mean for a really long period down the road, right? And those are two different things.
Oh,
But
they're two very different
generally
things.
speaking, I would say that globally, it's on the UN Sustainable Development Goals, it's on the United States agency goals. Is that affordability and the wealth gaps is really a major issue for governments. They want to help offset this huge wealth gaps that are created in societies that reward the rich and kind of punish poor. And unfortunately, we've seen wider and wider and wider wealth gaps over the last several years. And so it's a major initiative. It wouldn't surprise me if it didn't pass. If it did pass, I think it probably will. If you look at just the agencies over the last couple of years, each April they publish new rules and new guidelines, and they're providing fewer and fewer loans to people that are buying investment properties or second
Correct.
homes in
Yep.
order to prioritize this federally backed mortgage money toward first-time home buyers and those that are below a certain income level. And so I think it's a good thing that the government is starting to help people get into home ownership to try to help, narrow that wealth gap and give people home ownership, which hopefully gives them equity, because most people's wealth is held in their home compared to any other assets. Most people like you and I aren't, other than people like you and I, aren't investing in the stock market or in second homes. Basically, what they own in their own home is where their wealth is. And so I think it's good that they want to do that. I do think it's good for values over time. At the same time, what I'm kind of worrying about and thinking about over here is they're also really pushing for and asking for feedback for a national rent control type of legislation at the same time. So at the same time that they're going to try to push people into buying a home, they're also going to start saying, hey, landlords, you got to stop raising rents. And if that happens nationally, it's going to be really interesting to see how many people choose to rent, how many people continue to buy, multifamily type housing versus single. And then if you go really far down the path, even if you have all those new homeowners, our demographics over the long term are coming down. And so over the long term, we might have a really big spike in supply and lower demand, and that could kind of reverse. So I'm just kind of like we talked about last week, a dollar cost averaging kind of investor, like buy housing, buy, stuff in every market. Some will go really high, some will go really low. Watch the cycles, watch these things, and think about, if this happens, how can I take advantage of it as an investor? What can I buy? Maybe for me, Michael, given what we talked about in video number 1 about commercial real estate, is I shift from buying all apartments to buying some more single family houses over the next several years, because I think values are just going to continue to go up. So, those are the kind of things that I think about when I see these types of legislation is, okay, there could be a real opportunity here. Maybe
sure.
I shift some of what I'm doing. And so, buying single family houses today, if you can get them to cash flow, this is a good thing for potentially having values go up when otherwise they could maybe start coming down in certain areas.
Yeah, when I look at this, and again, if we assumed it gets approved, because I think there's very little that the left and right agree on. I think housing is one of those things, right? You could get
Yes.
enough of both sides to vote. So my fear is this comes, maybe it gets adjusted slightly to make everybody happy.
Mhm.
But Anna, this is kind of like 2004, 2005 to me. So what do I mean by that? This gets approved, launched. Maybe they do it in tranches, 25 billion for the next 4, however they slice it up. What I think happens, back to your point about George Bush Jr., this feels good for the moment, right? And the moment might be 3 or 4 years, right? I
Right.
happen to own, let's say I own 10 single family homes already. And let's say they're 250 grand and they cash flow today. I hold those for the next couple of years. Those might be 400 grand, because you can't build a home for 250 grand in my market today.
Right.
So this is just going to push the values up, make them even less affordable, and then allow me to do what I did in my book. Oh, the peak is here. Time to sell them all. Maybe I'll 1031 into depressed assets in 2026 in apartments again. Did that before. That was pretty cool.
Yes. Right.
Or I'll just take the cash and wait on the sidelines. Because like you said, this program that was in the late 80s, it didn't end well. All you got to do is realize we're stretched, sell, sit on cash, wait a couple of years,
Right.
because
Right.
just doesn't end well. It just doesn't
Yeah,
end
and
well.
you have to watch these programs and watch these cycles and really, to simplify it for everybody, it all comes down to supply and demand. If you can think about supply and demand and how different programs at different times in the economy are impacting supply and demand and the type of housing you provide in the areas that you're providing it in, you can pretty well get ahead. Now, sometimes we get way ahead. I'm rarely behind on stuff. I'm usually thinking ahead, and
Early,
maybe I'm
yeah,
too early, right? Like I
right.
sold too early some of my properties.
Been
Like if
there,
I had
been
only
there.
known, I would have held them a little longer, right? But you watch the risks and then you mitigate those, and then you look at the potential upside and you get in early. You start thinking about it early. And so, to me, this is a positive thing for housing overall. I think we also have to do is look at, what does that program target? So to your point, I'd like to see, is there a
Yeah,
certain top dollar amount for a house? And then I want to say, where are the most people that are going to be first generational homeowners? Where do they live? Because they're not likely to move across the country. They're going to stay where their
right.
families are and their communities and whatever. what is that price range threshold?
Yeah.
And that's where I want to buy in those areas at that price point, because
Yep.
higher end houses are not going to go up as high, because this is 4 million new that are looking for first time home buyer type
Correct.
of price ranges. So really think about, as you're looking at houses that you want to buy, do I want to buy the $180,000 house if you can still find it? Do I want to buy the $250,000 house, or do I want to go into the, $4,000 a month, $400,000 houses? I'm probably going to target more single family homes in areas that there's high renters, not many homeowners,
Hmm.
that will qualify for exactly this price range house, and then go in, renovate them, make them really nice, buy
Yep.
existing stock, or maybe even, work with a contractor or a developer to start building some.
Yeah. This is again, I understand the motivation. I understand the will to help. I was housing insecure growing up. It's all good things,
Yes.
but releasing 4 million buyers when there is no supply is not a good thing long term.
Yeah.
Anna, where can people find you?
I want to say one last thing. It's really interesting too how sometimes the Fed and fiscal policy and monetary policy, the US government versus they kind of offset each other. So
Yeah.
one's trying to do one thing and the other's trying to do another thing. And
Oh,
that's real interesting for what'll happen with rates down the road. So
exactly.
you can find me at reimom.com for real estate and financial consulting and coaching, and here on your channel.
Thank you so much, Anna.